Hello, members. This is Aman from Upmove Stocks. Hope all of you are doing well. Well, certainly the situation is not right. It's not great as of now, as far as stocks and indexes are concerned. So, like all of us must be holding stocks in which we are stuck as of now because the fall has been very, very sharp, almost 20% to 30%. There has been fall even in large caps. They have fallen by 10%, 15% within like past 3 to 4 days. So there's nothing much to discuss about the fall because the fall was like apparent, but it would come so sharp that we had no idea about. So today we will be discussing how Nifty 50 approached from 18,600 to 16,400 in maybe just in exactly 2 months. It started falling on 19th of October 2021 and today is 20th of December 2021. So just to make you learn how to analyze charts, how to use these charts for technical analysis purposes, we will be discussing two important patterns that were formed in Nifty 50 charts. So today we will be explaining you how these charts worked, where we failed as analysts, and all these things we will be discussing today. So before proceeding, we would like to inform you that we had intimated our members around 10 to 11 days back that Nifty 50 could touch the level of 16,500. Yes, we made a mistake in analyzing a particular candle and we informed them that as of now 16,500 doesn't seem to be possible. The market may reverse, but suddenly the Omicron virus became so prevalent in the news and it is affecting all the major countries of the world, and there are possibilities of lockdowns, travel restrictions and all that we are seeing such drastic falls in the past few days. From 13th of December to till today, we have already seen a fall of almost 1,000 points, even more than that, we believe. So yes. So how we had predicted that Nifty 50 could touch 16,500 in the coming days. First of all, we are going to explain you that so that you can learn also and make a note of things for your future references. Please observe that these videos are only for your educational purposes and we have no intent to promote any trading or selling in Nifty 50 or any of the stocks that we provide information on. So Nifty 50, as you can see that we have drawn some lines. What is the significance of these lines? We are going to explain you. There are two major patterns that have formed on Nifty 50 charts. One is head and shoulders pattern and the other one is flag pattern. So when a head and shoulders pattern is formed in an uptrend, it is an indication of trend reversal provided it is confirmed by a breakdown. So first of all, we will be discussing head and shoulders pattern. As you can see that this is one shoulder. Okay, this is one shoulder. Nifty 50 went up like this and then came down. After that, it went further up and then came down. And then it again tried to go up and then came down. So this is one shoulder. This is the head and this is another shoulder. So when we connect the lows of these lines, we get a trend line, or you can say neckline in technical analysis. So head and shoulder pattern is confirmed once the breakout of this neckline is given on the downside. So you can see that breakdown occurred around this level, somewhere this level. So how the possible downside is calculated with the use of this pattern, now we are going to explain you that. We have already mentioned all the information here so that some time is saved. So you can see that here HNS mean head and shoulder pattern. So how we calculate the possible downside from the breakout level, now we are going to explain you that. As per the head and shoulders pattern, we need to find two important values. One is the highest value of the head, so you can see that is 18604, and the lowest value of the entire head and shoulders pattern. So we can see that it is coming around, it is coming here. Okay, so it is 17,326. We have taken it as a rounded figure, 17,330. So the highest level is 18604 and the lowest point is 17,330. Now we need to arrive at the difference between the highest value and the lowest value, which is 1274 points. So the difference between this value and this value is 1274 points. Now we will try to calculate the possible downside from the breakdown or breakout, you can say, as of now. So breakdown occurred here. Okay, so breakdown occurred here, somewhere here. the level of breakout is coming around to be 17,765. We are taking this as the possible, this point as the somewhere this point as the breakdown level. So the difference between the highest level and the lowest level will be subtracted from the point from the breakdown level. So that is 17,765. So 17,765 minus 1274 points indicates a possible target, a possible projected figure for Nifty that was coming around to be 16,491. So on the basis of this pattern, we had informed our members that there is a possibility that Nifty 50 might touch 16,500 in the coming days. It did happen today, but we made a mistake that we are also going to discuss with you in a short while. So this is head and shoulders pattern. We will just revise it once again. This is the shoulder, this is the head, this is the shoulder. So the difference between the highest value or the head, highest value of the head and the lowest point of the entire head and shoulder pattern will be deducted from the breakdown level, and we will try to arrive at the projected figure where the Nifty 50 could have arrived if this pattern had confirmed. So this pattern had confirmed in this region around 17,765 or 17,770. After that, it fell down and it came down to 16,410 today. So yes, it did meet our target of 16,500, but we had made a mistake in between that we are going to discuss after some time. So now we will be discussing the next pattern, that is the inverted flag pattern. You can see there is a pole in dark blue line. Then there are two lines connecting we will take this as the lower one connecting the highs, okay, of the previous highs made by Nifty 50 in the recent times, and the lower one connecting the lows Nifty 50 had made in recent times. So you can see that Nifty 50 first touched this level of 16,782, went back upside, and then it touched the high of 17,489. Then it came down back, then it went up again. So this is how, like, it was forming some, it was finding support here and it was finding a resistance here. So we connected these lines and we formed an inverted flag pattern here. So what mistake we made, now we are going to discuss that. There was a bearish engulfing candle on 13th of December 2021. We have also prepared a video on this. If you want to check this, you can refer to that. So normally what has been observed in the past, that bearish engulfing candle when formed in daily charts doesn't work quite well in case of indexes. We are talking like Nifty 50, Bank Nifty. So we thought that this time also this could be a possible trap created by the big players to acquire stocks from small players at lower prices. It did, like on the very next day, it did form a spinning top type of candle, and so there was a possibility that Nifty 50 might move up from here. But what happened, suddenly the news of Omicron became so like relevant on TV news, everywhere it became so relevant that the fall started taking place. So we are not sure as to whether this fall is on account of Omicron or any other news, but yes, as of now it is being said that this is because of Omicron variant and it's widespread throughout the world. So this is the mistake this was the mistake that we made. Had we not considered the past history of Nifty 50 regarding bearish engulfing candle, we would have exited from all the positions here itself. We also made another mistake that we didn't like appreciated didn't like took the stop loss or maintained the stop loss as and when we came to know about this bearish engulfing candle. So yes, this was a mistake that we made. Otherwise we could have possibly exited around 17,360. that was around 700 to 800 points above the current level. So this is very, very important. Yes, this mistake we made, and it was a big mistake for us also as analysts. So these mistakes do happen because sometimes you rely on historical data and sometimes you try to arrive at conclusions considering the market scenario. So yes, there was a mistake on our part and it was quite heavy this time. So we will be a little more aggressive and a little more conscious about a little more like proactive in analyzing things from now onwards, and we will also take into consideration the relevance of a particular candle as a whole rather than taking it as rather than relying on the past history of that particular candle. So now we will be discussing the flag pattern, how we can use inverted flag pattern to arrive at a possible figure as to where Nifty 50 can go from here. So in case of flag pattern, we need to find two values. One is the upper value of the pole and the lower value of the, and the second one is the lower value of the pole. So you can take this as the, because it is an inverted, I will take this as upper and this is low. So the upper value of the pole is coming out to be, or let us say this is the upper and this is the low. Otherwise, it will create confusion in your mind because it is, you know, it is on the upper side. So upper value of the pole is, we have mentioned, is 18210. You can see here. Okay. So it is 18210 and the lowest value is coming out to be around 16782. You will have to again see it here. Okay. It is 6782. So once again, we will calculate the difference between these two values, which is coming out to be 1428 points. We have already mentioned everything here so that a little time is saved. So 1428 points. Now what we need to do, again from the breakdown level where the flag pattern has been broken, because it has not broken on the upside, it has broken on the downside, it has given a breakdown. So we will be deducting the value of the difference between the upper value of the pole and lower value of the pole from the breakdown level. So the breakdown level is coming around to be, you can see here, it is coming around to be 17095. It is, these values are approximate, there can be a variation of maybe 20-30 points, but yes, on a major side you can take it as 17095. You will see here, if you will see, you will see the figure here. Okay, so it is around 17095. This is 17095. This is an approximate value. Lowest point is quite, so from this value you will deduct the difference that we have arrived at, that is 1428 points. So when you will deduct 1428 from the breakdown level of 17095, you will arrive at a possible figure of 15667. So as per the flag pattern, there is a possibility that Nifty 50 may fall by another 700 from this level. It can go up to 15667. Okay, so it is a huge fall, around 1400 points from this level, and you can see that Nifty 50 has already taken a fall of 600 points within 2 days. But is 15667 a real possibility? No, we cannot be sure about that, because Nifty 50 has several supports in between. The first support that it will have will be at you can see this value, we have already drawn the lines. This value 16375, exact 16375, it will have a value, it will have a support. After that, its next major support is at this level, which is coming on to be 50945, or you can take 50950. This is the value 15667, which is coming as the possible target on if we use flag pattern as the basis for identifying the Nifty 50 level in the coming days. So before 1566, before arriving at 15667, Nifty 50 is likely to find support at 16375 and the 15945. So these levels, through these levels we are trying to explain you how technical analysis is used in making projections, and will these projections hold true or not, that we come to know only when actual things start happening in the market. Because we believe at this point of time, on 19th of October, when Nifty 50 started falling, there was no news related to Omicron. So this fall could be a scenario of profit booking, this fall. Okay, after that it went up. Okay, so we believe that around 15th of November, we are not exactly sure as to when the news of Omicron first came on the news channels, but again it went up, then it came back, then it fell down, it broke the neckline of the head and shoulder pattern. So we knew that there is some weakness in Nifty 50 and the lowest possible target could be 16,500. So at this point of time, somewhere we communicated it to our members that you can see Nifty 50 touching 16,500 in the coming days. So, but we made a huge mistake here in these candles, simply because we considered the history of bearish engulfing in Nifty 50 charts recently. So we made a mistake at this candle, and we believe that we will have to pay a huge price for it until and unless Nifty 50 starts recovering in the coming days. So yes, based on the flag pattern, the possible level that comes around is 15667, but you should not take any position on the base of this level, because these levels will keep on changing every day. There is a possibility that Nifty 50 might move upwards tomorrow. If Nifty 50 tries to move upward, it will first find resistance on this line. Okay, so now this line will act as a resistance to Nifty 50. So there is a possibility that as and when Nifty 50 will touch this line, it will try to fall back again. So we can say that some strength in Nifty 50 will come once and only when it closes above this line and maintains its strong position and keeps closing within this channel. You can say this channel. Now this is a channel also, this channel, and some strength will come only once it breaks this line and manages to hold that breakout on the upper side. So Nifty 50 as of now looks weak. The major supports are at 16,375 and then 16,945. After that, the level of, as per the flag pattern, it could possibly touch 15,667. Then we will see that some other patterns will be forming and we will be doing projections based on that. So this is very important for any beginner or an analyst to know how to use these patterns for making projections and how to identify the mistakes made by him or her and improve on them in the future. So yes, there is a possibility that we might see further downside if this Omicron doesn't subside within a day or two, or maybe within a week or so, and we we again see movement of people across countries and lesser restrictions and lesser lockdown possibilities. Then only we might see some possibility. As of now, the market is in a oversold category. It is being hugely sold. It has been hugely sold in the last 5 to 6 days. It is on the oversold category. So we might see some pullbacks, but should we be buying call options, put options at this point of time? You should absolutely avoid any kind of stock trading and investing activity at this point of time, because we don't know as to where Nifty 50 can go from here. As of now, Nifty 50 is, you will see that every time Nifty 50 will try to rise, there will be a selling pressure on the upside, because people will find opportunities to exit from their stocks, any stock in which they are at cost to cost or at profit, because there is a kind of fear in the market. To ascertain how fear is determined, you can use India VIX. So it has also increased today by around 11 to 12%, we believe so. So that is also indicating a certain level of fear in the market. Yes, today's fall was very, very sharp. It was of like 372 points. At one point of time, it was like around 489 points, we believe so, and it was huge. So the fall, today's fall was greater than the previous fall, and it is going like that only. So please keep 3 things in mind. These videos are only for your education purposes. Second, the levels that we have identified are based on technical patterns. These patterns can fail every now and then, but yes, they can be used to identify or to create a possible projection in your mind. But will these levels arrive? No, it is not like that. Yes, in case of head and shoulders pattern, it did like arrive its value of 16,491, but today it took support, it nearly took support at the first support level of 16,375. You can see that it made a low of 16,410. So it was just about 25 points. It went directly from, it took support around here and went up from here. So now you will see some strength in Nifty 50 coming when it will start when it will move above the low of this candle, which is 16,966, and it is bound to find resistance at this level. But if it crosses this level, anywhere this level above, it starts closing above this line, you can be a little assured that Nifty 50 has some strength, and more strength will come when it will break this line on the upper side and manages to hold it. So this entire analysis has been done only with the purpose of educating our members that how a possible downside from the highest level to the lowest level can be analyzed on a day-to-day basis, and even after the entire fall has occurred. This chart we had prepared around, maybe when it was here, we had prepared this chart, and we had some kind of like information that there is a possibility that Nifty 50 may fall down by 60, may fall down to 16,500, and we did intimate it to our members that there is a possibility that it may come to 16,500. But we made a mistake here, where we thought that Nifty 50 is trying to find resistance here, and it will break on the upside once some positive news comes but it went the entire analysis went against us, and there is a huge fall in the Nifty 50 that we are seeing right now. So this is head and shoulders pattern for you. This is inverted flag pattern for you. The mistake that we made is here. Yes, the mistake was not of the candle, but of ours, that we used some historical. Actually, we considered this candle. Okay, so this is also bearish engulfing candle, and this is also bearish engulfing candle. So yes, we made a mistake. It was in the uptrend. It was also in the uptrend. So we considered history as a basis for we surely made a mistake here. But yes, this is the kind of analysis a person should do, irrespective whether he or she is a beginner or a professional. And yes, you should always try to learn from your mistakes. We will in future, we will see a bearish engulfing candle, we will make sure that the stop losses are in place, and this kind of a mistake is not repeated in future. So we hope that you would use this analysis for your educational purposes, to educate yourself, make aware yourselves about the various patterns that are there in Nifty 50, and do some good for yourself in the form of education and professional education. So this is Aman signing off. Thanks a lot. Bye bye. Take care.